Hey everyone, and welcome back to Wealthy Brains. Lobo Tiggre is the founder, CEO, and principal analyst and editor of Louise James LLC. He researched and recommended speculative opportunities in Casey Research publications from 2004 to 2018, writing under the name Louis James. For privacy reasons. While at Casey Research, he learned about the newsletter business from Casey co-founder David Galland and resource speculation from the legendary speculator Doug Casey himself. Although frequently mistaken for one, Mr. Tiggre is not a professional geologist, nor does he hold a CFA designation, and he is not a licensed financial advisor. Tiggre is a speculator who, during his time with Doug Casey, also learned from many other industry leaders, including Sprott Global's Rick Rule, former newsletter writer Bob Bishop, fellow newsletter writer and geologist Brent Cook, exploration geologist and multiple mine finder Ron Parrott, and many others. Mr. Tiggre is a graduate of Aiglon College in Chiers-Villers, Switzerland. His formal education included studies in physics at Rensselaer Polytechnic Institute. He also studied economics at UNC Chapel Hill and wrapped up with the magna cum laude BA in sociology from Duke University. Tiggre grew up speaking both Spanish and English. He later learned French, German, and is now working on Russian. He is happily married with 5 children and lives in San Juan, Puerto Rico. Lobo Tiggre. Mining speculator Lobo Tiggre sees energy transition and monetary policy as important drivers in metals. Tiggre has been writing in the investment newsletter business for well over a decade. He used to work for Doug Casey Research but has since struck out his own. He talks about his background, which isn't in investment or geology. Tiggre is bullish on what he considers monetary metals, gold, and especially silver. I'm curious whether he could see himself shorting gold or change his position. According to Tiggre, silver is currently benefiting from being rediscovered as an industrial metal. It is a key metal in the energy transition. His favorite stage of investing is in the so-called PPSS, pre-production sweet spot. This is a stage that applies to companies that have a single mine they've started building. Tiggre's research indicates that this is an especially profitable stage to invest. Other important features of this process are the 8 P's of resource investing he used to use at Doug Casey Research as well. Tiggre isn't just bullish on silver and gold. He really likes copper and nickel as well, metals that should be pivotal during the energy transition and that are relatively rare. Surprisingly, he seems most bullish on the uranium sector. Tiggre estimates uranium, despite a recent run, is trading well below the cost to mine it. The energy transition and Fukushima, well in the rear-view mirror, may play a role in more and more countries considering nuclear energy. Gold and silver will head higher, according to him. Gold has skyrocketed higher this week. Gold has rocketed higher this week, drawing ever closer to its previous all-time high and sparking excitement in market participants who have been eagerly waiting for it to breach that level. Lobo Tiggre, founder and editor of Independent Speculator, is optimistic and wouldn't be surprised to see the gold price double in the future, but he also offered words of caution. We should expect great volatility, he said, adding that this is even more so the case for silver. I think silver is more vulnerable to correction than gold, just because it's increasing 5% per day or 7% this week. That's fantastic, but it doesn't mean it has to keep going. Despite those warnings, he emphasized that he's bullish on both gold and silver due to an array of familiar factors in terms of what's going on. Everybody's got their favorite answers. I'm up of the camp that really this is all about the money printing. The easy money, the Fed's uber unprecedented actions, making the previously unprecedented actions look small by comparison, he explained. It's really the money printing, the easy money, the negative interest rates that takes away that whole argument that gold doesn't pay interest. Well, you know what? Not paying interest is a whole lot better than paying negative interest, he quipped. In terms of what's next for gold, Tiggre said it's in the stronger place than it was the last time it was in the price range. The gold market has had an eventful 2 weeks, with the US president and coronavirus vaccine news both impacting the yellow metal's price. Lobo discusses the current consolidation in gold and the retesting of support levels. He cautions that some gold pundits focus too much on the supply-demand characteristics of gold while missing the bigger picture that gold is primarily a safe haven asset. Companies will always put their best foot forward, and that's why due diligence is key. They're not likely to discuss the background issues with their projects, therefore you need to get information from someone who has been on the ground, and there are a great number of things that can go wrong while developing a mine. Investigating is often the only way to find out essential details about projects before the rest of the market, and ultimately that is the goal for an investor. Lobo discusses how easy it is to pick stocks during a bull market run and confuse that with skill. Hubris is mistaking upward market momentum for your own personal genius. He regrets not seeking and obtaining more advice from experts in the field, since that could have reduced his losses back in 2008. Also, understanding how individual deals worked in more depth could have prevented him from exiting positions prematurely. He recommends The Intelligent Investor by Benjamin Graham because of its important focus on understanding investor psychology. He sees the current gold correction as an opportunity that investors should not miss, and some big names are getting involved in the marketplace. That doesn't mean Tiggre is overly worried. While he sees stormy weather ahead, he encouraged the market watchers not to panic. I don't think the world's about to come to an end before January. He's also not concerned about what a COVID-19 vaccine could mean for gold, and said the precious metals price drop after Pfizer's vaccine news last week was predictable. It was predictable because there was a narrative throughout the year, much of the year, at least since March, that it was the COVID-19 situation that was pushing the fear button and pushing people into gold and silver. I don't think that's true at all, Tiggre explained. Gold's been on a rise for years now, really, and on a more marked rise since the Powell pivot in late of 2018. So this started way before COVID-19, and maybe the COVID panic is an extra boost, a tailwind. But the disappearance of the tailwind doesn't undo the fundamental situation for the market. With that in mind, he encouraged concerned investors to keep the bigger picture for gold in mind, emphasizing that it's not the time to get out of the market. That is all for today, folks. Would you like to add anything? Let us know in the comments section. If you enjoyed this video, then be sure to leave a like and subscribe if you are new. And I'll see you all in the next video.